So in this section, we will look at Japanese stocks. So this is chart number 36. Toyota, this is a 15-minute chart. We are looking at intraday now. And you can see these horizontal lines here. I think by now you should be able to recognize these lines if you have done level 6. These are pivot points and pivot lines. So question 1, what does the opening of this candle tell you? This green candle. Question 2, what does the closing of that same candle tell you? Question 3, is it wise to go short on this candle and why? So this red candle. 4, is it wise to go short on this candle and why? So this red candle. Number 5, what does the level of this pivot relative to previous day tell you? So you have to look at this black line and this line. Number 6, why is the high of this candle very important? So this candle. And number 7, why did the decline stop here in this area? So the first question, what does the opening of this candle tell you? Well, the opening of this candle, since this is the first candle of the day, the opening is above the pivot point. So it tells you that the day, this particular day, is likely to be bullish. Number 2, what does the closing of this candle tell you? Well, the closing of this candle is above that pivot line. So it reassures or reaffirms the fact that the opening tells us that the day is likely to be bullish. Number 3, is it wise to go short on this candle and why? So I would go short on this candle because this green candle breaks the R1 level, but in a couple of candles, the red candle closes back below R1, and as we know, the distance between R1 and the pivot point is called as the gravity. So pivot point acts as a gravity on the prices as long as the price remains between R1 and the pivot point. So if we go short here, the gravity is pushing the price down towards the pivot point. So my pivot point would be the target. Number 4, is it wise to go short on this candle and why? So on this candle, I would not go short although it is completing a dark cloud cover, because the moment R1 breaks, it has the tendency to become a support. So old resistance becomes new support in the intraday context. So when R1 breaks, that same R1 is likely to become support. So I would not go short near support. Number 5, what does the level of this pivot relative to previous day tell you? So this pivot line is above the prior day's pivot line, which means this day is likely to be more bullish than the prior day. Number 6, why is the high of this candle very important? See, this is a 15-minute chart, right? So if we look at the first 4 candles, 1, 2, 3, 4, those 4 candles complete the first hour of the trading session. So we know that the high and low of the first hour of the trading session are very important. It's very difficult to break that high and that low, that range. That is why the high of this candle is very important. Number 7, why did the decline stop here? Well, the answer is obvious, right? This candle has opened with a gap up, that is a rising window. So if you draw a line here, the lower line of the rising window becomes what? Support, right? So that's why the decline would have probably stopped here. So this is chart number 37, Sony 15-minute chart. So I have drawn the CPR lines here, the central pivot range. Question 1, what does this candle confirm? This red candle. Question 2, why is the height of this CPR larger than the previous day? So you have to look at this height and this height. Number 3, does this candle confirm a trend reversal and why? So this green candle. Number 4, why has a box range developed here? So in this area. Number 5, spot the candle that breaks the CPR on this chart. Number 6, if this candle was not a hammer, would you still pay attention to the low of this candle and why? So this particular candle. And number 7, why is this candle super bearish even though it does not satisfy our criteria of a long black or red real body? So this one. So question 1, what does this candle confirm? Well, this candle confirms the resistance created by the CPR. Remember, in a downtrend, the CPR, the entire width, acts as a resistance. So this candle is confirming that. Number 2, why is the height of this CPR larger than the previous day? So this height is created based on the price movement of the previous day. And this height is created based on the price movement of the previous day. So the reason why this is large because the previous day was volatile, and the reason why this is smaller than this is because its previous day was not very volatile. It was a range-bound market. Number 3, does this candle confirm a trend reversal and why? No, this candle does not confirm a trend reversal because it fails to break above that CPR. If this would have break above the CPR, then we can look at a trend reversal here because there is also a rising window here. But the CPR still holds as a resistance. When I say CPR, I am talking about the entire range. Number 4, why has a box range developed here? The answer is obvious, right? The upper line of the CPR is acting as a very, very strong resistance because we are in a downtrend. In a downtrend, the CPR becomes resistance. And the reason why there is a box range here is because you have resistance here and you have support here because you see there is a window here, the rising window. Rising window becomes what? Support. So that is why the price is sandwiched between the resistance and the support. Number 5, spot the candle that breaks the CPR on this chart. So if you look at the price movement from here till here completely, there is not a single candle on this chart that has broken above that higher line, upper line of the CPR. On any of these 4 days, 1, 2, 3, 4, there is not a single candle. This candle came very close to closing above that CPR, but failed to do so. Number 6, if this candle was not a hammer, would you still pay attention to the low of this candle and why? Definitely I would pay attention to it because as you can see, this is a 15-minute chart. So we look at first 4 candles, 1, 2, 3, 4. So that's the first hour of the day. So the high of the hour of the day is this and the low of the hour is this. It doesn't matter whether it's a hammer or not. The high and low of the first hour of the day is very important. It's not easy to break that. And as you can see, if I draw this line, even the last candle of the day could not break that low. So these are very important levels. I would definitely pay attention to that low. Number 7, why is this candle super bearish even though it does not satisfy our criteria of a long black real body? It does not satisfy the criteria because of this lower shadow. So why is that candle super bearish? Again, the same argument. You look at the first 4 candles, 1, 2, 3, 4, right? So this is the low. This is the low of the candle. And this is the high of this first hour of the market. So you have the high and low of the first hour of the market and this candle breaks that low. Okay, that is why it is a super bearish candle. So this is chart number 38, KNs, and this is a weekly time frame. Question 1, spot the false break on this chart. And I have drawn a line here. Question 2, would you buy on this candle and why? So this red candle. Question 3, would you buy on this candle and why? So this green candle. Question 4, spot the tweezer stop on this chart. So where is the tweezer stop here? Number 5, what do these 4 spinning tops tell you? So these spinning tops. Number 6, what would you immediately draw on that candle? So this green candle. And number 7, is that a falling window? Is it respected in the future price action? So this one. Spot the false break on this chart. I have given you a hint here. So here you have a support, potential support, right? It gets tested here, so now it becomes a multi-tested support. And there is a false break here because the candle did not close below that support line. So step number 1, step number 2, step number 3. Step number 1 is support. Step number 2 is testing of the support so that it becomes multi-tested support. Step number 3 is the break of that support. Not a breakout, but a break. And step number 4 is the close above that support line. That's a false break scenario. Number 2, would you buy on this candle? And why? I would not buy on this candle. 2 reasons. Because it's a very vibrant red candle, it is very bearish. And second, it is just completing the 3rd step. We are not at the 4th step yet in the false break scenario. For the 4th step, you have to wait for a close of the next candle or one of the next 3 candles after this candle to close above this support line. So that is the reason why I would not buy on this candle. Would you buy on this candle and why? Of course, this completes the 4th step. So that is why I would consider buying on that candle. And since the price has already gone up far from the low, I would probably use the Fibonacci levels on this candle and put my buy limit order at the 61% level somewhere here and then look for this target. That's a decent reward to risk ratio trade. Number 4, spot the tweezer stop on this chart. So tweezer stop comes at the top of the market. So let's see the tops of the market. This is not a tweezer stop because for a tweezer stop you need it tall. The first candle should be taller. So you don't have a tweezer stop here. At the bottom there should not be a tweezer stop. If it is coming at the bottom, it's not a tweezer stop. What about these 2 candles? No, these 2 candles have different highs. Again, here there is no tweezer stop here. What else? No, here. I don't see any tweezer stop here. So that's a trick question. There is no tweezer stop on this chart. What do these 4 spinning tops tell you? So these 4 spinning tops are telling you that the prior trend is coming to an end. So the market is in a state of confusion, in a state of indecision here. The bears are not allowing the price to go up. And number 6, what would you immediately draw on that candle? So if you look at this candle, it's a shaven head, shaven bottom candle or a shaven top, shaven bottom candle. When you see that, what you do is you immediately draw a line at the low that becomes your potential support. And you also draw another line at the 50% of the real body. At that level, you draw another line because that is also likely to become support in subsequent price action. And look what happened here, right? So that's a 50% level. So I would immediately draw these 2 lines to see what happens next in subsequent price action. Is that a falling window? Of course, it's a falling window. Is it respected in the future price action? Of course, it is respected in the future price action. If you draw this line, I think it is respected. If you draw this line, yeah, it's exactly near that. So these candles are respecting that falling window. So yes, and probably that's the reason why you have a cluster of spinning tops here. So this is chart number 39, entity, daily time frame. Question 1. This candle confirms 3 things. What are they? So this red candle. Question 2. What is that candle hinting at and why? So this small candle. Number 3. What does this candle confirm? This green candle. Number 4. Is that a strong opening candle? Why? So this one. Number 5. Would you go short on this candle? So here. Number 6. Would you go long on this candle? So the same candle. Number 7, is that doji important and why? So this one. So question 1, this candle confirms 3 things. What are they? So first, the candle is confirming the completion of a variation of a dark cloud cover. That is 1. Second, it is confirming the bearish implication of a last engulfing top. So if you look at these 2 candles, that's a last engulfing top, right? Because if these 2 candles had come at the bottom, that becomes a bullish engulfing pattern. But since they are coming at the top of the market, it's a last engulfing top. And the close of this candle is confirming that bearish implication of the last engulfing top. So first is the confirmation of the last engulfing top, and second is the completion of the variation of the dark cloud cover. And third, if you see this, there is a falling window here. If you draw this line, so that falling window gets respected on this candle. So this is step number 1, resistance creation. Step number 2, testing of the resistance. This is a false breakout. Step number 3, and immediately next candle. Step number 4, it closes below that resistance. So this is a false breakout scenario. It's a falling of the roof. So it is confirming the false breakout. So those are the 3 things that this candle is confirming. Number 2, what is that candle hinting at and why? So this candle is hinting at a trend reversal. Trend reversal means the prior trend is likely to end. And rightly so, if you look at the price action subsequent to this candle, the price just flattened out here. It did not go up. So this was the first signal that, actually it was a second signal that the trend is weakening. The first signal was given by the upper shadow of this candle. Till then the trend was very strong. So this is a star candle and a high wave candle, which represents indecision and confusion in the market. Number 3, what does this candle confirm? Well, it confirms the support of a rising window. Number 4, is that a strong opening candle and why? I would say yes, that's a strong opening candle because it opens just near the midpoint of the prior green candle. Ideally, if this would have opened below the midpoint, it would have been even stronger. Would you go short on this candle? Well, this candle has broken the window, the rising window. That's a good sign, but is that a reason to go short? Okay, so let's say you go short here. Where is your target? Your target is probably this or this. I think this should be the first target. So T1, and this should be your T2, right? So that's your reward. And what's your risk? So this candle is completing a falling window. So that's your stop loss. So the reward to risk ratio is less than 2:1, right? So that is the reason why I would not go short there. Would you go long on that candle? Okay. So again, it completes the break of the falling window. That itself is a bearish sign. Second, the candle itself is red. Why would I go long on a red candle? So I would not go long on that candle. And obvious reason is if the candle is completing a falling window, the falling window itself becomes resistance, right? So why would I buy near the resistance? Number 7, is that doji important and why? Well, I think that doji is important because if you look at these 2 candles, that's completing a rising window. A rising window becomes support, and that support is confirmed by this doji. So that is why I would give some importance to that doji candle. So chart number 40, Mitsubishi, weekly. I have drawn 2 lines here. One is a 12-period exponential moving average and one is a 3-period exponential moving average. So the less volatile one is a 12-period and this red line, that's a 3-period. Question 1, what is this crossover chord? So the blue and the red line cross here, as you can see. So what is that crossover called? Number 2, what is this crossover called? There is again a cross here. Number 3, if you went short in this area, on which candle would you exit the trade based on the movement of the moving averages? Number 4, between the dead and the golden cross, how many candles closed above the higher EMA line? So how many candles closed above the blue line? Number 5, why is this candle not a hammer? So this one. Number 6, why does this candle carry extra significance? So this one. Number 7, after the golden cross, will the higher EMA line become a support and why? So what is this crossover called? So you have two exponential moving averages here, so 12 period and 3 period. 12 period is the slow moving average and 3 period is, it's a volatile because the periods are very low. So that's why 3 period is a fast moving average. 12 period is a slow moving average, which is the blue line, and the other one is the red line. So with the red line, the fast moving average is crossing the slow moving average on the downside. So that's called as a dead cross. And what is this crossover called? So it's a reverse. So it's the fast moving average is crossing the slow moving average on the upside. So that's called as a golden cross. Number 3, if you went short in this area, on which candle would you exit the trade based on the movement of the evening moving averages? So let's say you go short in this area, you have a short position and you see a dead cross. So obviously the dead cross will come after these candles because moving averages are a lagging indicator. So the moment you see the dead cross, what you can do is you can wait till you see the next cross, which is a golden cross. So if you are short in this area, the dead cross is confirming that bearish implication, and you wait for the golden cross, which occurs here with this candle. So if you are short here, you should exit on the close of this candle, this green candle. Number 4, between the dead cross and the golden cross, how many candles closed above the higher EMA line? So how many candles between this dead cross and the golden cross, how many candles have closed above the blue line? So if you look at this candle is actually creating that cross. So this candle closes above the blue line. What else? This candle. So actually this candle is creating that golden cross. So really if you see, there is only one candle that closes above the higher EMA line or the slow moving average. Number 5, why is this candle not a hammer? Because of the slightly longer upper shadow, right? Why does this candle carry extra significance? This candle carries extra significance because first, it completes a shooting star. Second, it's almost a doji. Third, it completes a rising window. Right? A shooting star after a rising window is a complete indecision scenario where, the shooting star creates the resistance and the rising window creates the support. So that is why the price is likely to remain sandwiched between these two levels. That is probably why you see so many spinning tops here stuck at that area, and that too on a weekly chart. So the moment you see a shooting star creating a rising window, you have to pay attention to that candle. You know that the price is likely to get sandwiched in that area. This is very good for options traders, by the way. People who want to sell options at somewhere here, because they know that the price is likely to remain sandwiched, so they can earn on the time decay. Anyways, those are complicated concepts which I don't want to discuss here. But something like this helps options traders as well, especially the options sellers, because options sellers are the ones who like to kill time, because the more time they kill, the more money they make. Anyways, number 7, after the golden cross, will the higher EMA line become a support and why? So after this golden cross, will the higher EMA line become support? So if you see here, after the dead cross, the higher EMA line, the slow moving average, it really became resistance, right? So chances are after the golden cross, that same line is likely to become support, okay? It's not that it will become support. It is most likely to become support.